Welcome, everyone. My guest for this sponsored episode is Elezaj, Chief Strategy Officer at UWM, to talk about housing affordability and UWM's strategy to help brokers in this environment. Alex, welcome back to the podcast.
Hey, Sarah. Good to see you.
Good to see you and good to have you on. I'm excited about what we're going to be talking about today, right? Which is what UWM is doing, some of their latest moves. And one of the things that we see is that UWM continues to roll out products to help with home affordability. We know that's a huge issue. Most recently, you announced a 0% down product. So how has that been going?
The short answer is zero down's been going fantastic. Obviously, it's a big rollout for us. We're excited about it. It's helping consumers across America. But more importantly, just zero down, we continue to innovate. These are, we're always innovating with new products, and this has been going on for years and years. So zero down is just another product that we're doing to help consumers, and there's going to be more to come, as we move forward, over the next several months. But it's been going great, and we're very excited about it.
Can you give me a little bit more detail about how that works? Like, who's qualified, how much money that is, and what that product really looks like?
Yeah. So again, like as we rolled out, it's more focused on lower income borrowers. Like that's really the primary driver, because as we talked about, the biggest barrier to home ownership is the down payment. We have a lot of people who can afford the payment, but don't necessarily have that, $7,000, $8,000, $9,000 to put down. Or if they do, have that in the bank, we'd much prefer them to have that as a reserve as things come up and utilize our program to help them with the down payment. So that was really the idea behind it, is how do we help consumers with the down payment assistance? So we provide, 3% up to $15,000 on a loan. And obviously there's a lot of criteria that they have to meet so that these loans are being done in a safe and sound way, under the right underwriting guidelines and borrower eligibility. But so far it's been successful, and we're really excited about it, and it'll keep growing for a long time.
So we know that, when you're looking at helping the consumers, you're also helping brokers help those consumers, right? And how does this 0% down program help them compete against other lenders, other kinds of lenders? If they're just this mom and pop shop, or even if they're a bigger shop, how does that help them compete?
Well, again, this is a product that, a non-bank doesn't have, right? And we're the only one who has it out there. So for an independent broker, it just gives them more product, right? It's just another tool that they have. It helps them get business and get meetings with real estate agents. It helps market themselves for consumers across the country. And again, that is the benefit of working with an independent broker, because whether it's zero down or whether it's a buy down product or a variety of other products, you could be a veteran, you could have, there's just so many different things that are out there. And that's the real benefit of working with an independent broker, because they work with not only with UWM, but they work with many other lenders. So, that product for Sarah, for you and your family, you're going to have a lot more options by using that independent versus working with a captive loan officer, at a bank or at a retail lender.
I appreciate that. Let's talk a little bit about educational initiatives, right? So one of the real challenges in helping homeowners is they often have no idea what they qualify for. They don't even know what's out there. We always talk about, the myth of the 20% down, which in this market, with home prices where they are, with mortgage rates where they are, if you're trying to save for 20%, it's a losing battle to try to get there and get ahead of inflation. So how does UWM really help educate homeowners about what's available?
Yeah, it's a great question. I'm so glad you brought that up, because the whole 20%, that's decades, it was many, many years ago, and how people thought about things, and maybe still how people think about things. But obviously with zero down and other programs that we have, that's simply not the case anymore. But I think you bring up an important part in terms of education. So the way that we look at it is there's really two approaches to it. One on the consumer side, where our partnership with the MBA and the rollout of Mortgage Matchup has been hugely successful, because what we get from consumers a lot is, hey, I love this independent broker, thought, and I would love to connect with one, but how do I find one? And that's really the whole, thought process behind, the partnership with the MBA and really getting it out there, is because it allows people to go to Mortgage Matchup, type in their address, and they're going to get a loan officer where they're going to have reviews on there. There's calculators on there. There's educational things on the website now to really help them be able to steer them to an independent where the independent's their advocate, right? They're the expert, and really being able to provide that consumer the assistance that they need to make sure that they're picking the right product. Because if you just go to Google and type in, hey, how do I get a mortgage or what's my mortgage rates? I mean, you get a lot of paid advertising, you get a lot of information on there that's probably not going to be the best thing for consumers. So, being able to help, Mortgage Match Up help navigate consumers to a broker so they can get the right advice is very important to us. So that's on the consumer side. And then the other side is the what can we do as UWM to help educate brokers and make sure that they have the most knowledge in the marketplace. So we have a whole team of people here on our learning team and our sales training team that really help with this. So Sarah, every single week here we have 600, 700, 800 clients, brokers and loan officers and real estate agents that come in from across the country. So you're talking about 2,000-3,000 people a month, that are coming in, and it's 2-day training, 3-day training, and they're learning our products. They're learning, how to answer all the questions. We obviously have things like Chat UWM that we've rolled out, but Success Track to me is probably the biggest thing that we do at our company in terms of education, because we have literally hundreds and thousands of clients here every single week and every single month learning on how to get better.
I feel like this is, in this environment, it's even more important because we have all this disruption happening on the real estate side, right? We're not even exactly sure how all that's going to shake out. But in the meantime, you have consumers who might have in the past looked to their real estate partner to be like, okay, who's a lender that you use or whatever. But now, like, consumers need to know before they even start looking at houses, what is it that I'm actually even pre-qualified for? What's even in the ballpark? And I feel like, the mortgage lender has, the broker has an opportunity right now that's pretty unique to really be that very first contact and the person who has all the answers for them.
You're absolutely right. And we've seen, I mean, if you go back, Q1 numbers just came out in UWM, or wholesale, I should say, wholesale market share was 26.4%. That's the highest number in 15 years. So everything we've been saying for years is really come to fruition where, even in a rising rate environment, there's still going to be home purchase out there, right? There's people are still going to buy homes, but they're nervous. Like, they don't know what they qualify for. They don't know what programs are out there for them. That's why it's so important to really work with the independent to even know what, to your point, like what you can qualify for. But inflation's high, rates are high, people are nervous. There's a lot going on right now in the world. And people are just a little bit nervous about it. I mean, so I think, them taking a step back and saying, okay, what is the best approach to helping me navigate this process is working with the independent, because again, they're just an advocate. They're an advocate. They're the expert. They're going to give you the right advice to make sure that you're taking full advantage of all that's out there. And it's not just about the interest rate all the time. It's about what are the closing costs. Hey, why am I spending $3,000 or $4,000 on title? When UWM has this track thing that we can do, Track Plus that we can do, we have where credit reports are, no cost credit reports at UWM, faster close times, which reduce, the lock costs that are, so there's so many different things that are out there, speed to close, closing loans very quickly. So there's a lot that goes into it. So I think the average consumer doesn't know all these details. So working with the independent who's going to be able to help navigate is just hugely beneficial.
I think it's interesting that, we've seen a really concerted effort by the Biden administration to really look at those closing costs, to look at title, look at appraisal, look at all of the sort of ancillary costs or, around the edges that, like, okay, nobody can do anything about mortgage rates, seemingly, right? No, nobody can do so. Some of these things are beyond our control, but UWM has taken the things that they can control and looked at that really on a very per cost basis for the consumer.
Absolutely. And obviously, as the number one lender in the country, we have very good relationships with FHFA and Fannie Mae, Freddie Mac, the CFPB. And I think the teams are all doing a great job of really trying to help consumers across the board. And, all these junk fees that are out there and a lot of these like credit reports that we mentioned, there's really not many options, right? I mean, there's a couple companies out there, that do this stuff. So I think the CFPB and others are doing a really nice job of really trying to put the pressure on and getting these things more in line to what they should be.
So I've been to your headquarters. I've seen the whole, this is how the sausage is made. Here's how you manufacture a loan, right, on that floor. So I know that there's so much thought put into the process. So tell me, how does UWM's mortgage lending process itself support the goal of making homes more affordable?
Yeah, so a couple things, you just hit it right on the head with the one building, right? So if you think about like the cost to manufacture a loan, we have over 8,000 people, at UWM, and we're all here in one building. There is no work from home. We're all here every single day working in the building. And everybody just focused on technology, speed, and how do we help the brokers be the most successful they possibly can to consumers and have the consumers benefit. So when you think about like the lower cost that we have to manufacture a loan, we're able to pass those savings on to consumers ultimately, right? So, and we also help brokers by being more efficient. So when we talk about whether it's Processor Assist Plus and Appraisal Direct and all these different things that we've done, we really try to help with the speed of things and help things be much more faster and much more efficient. So when we can close a loan and, even with an appraisal, just to use that example, our average, submission to clear to close on a loan with an appraisal, well, across the board is about 14 days at the company. If you take the appraisal out, we close loans and clear to close in, 1, 2, 3, 4 days. It's lightning fast. So when you think about it, 14 or 15 days to use that example versus, industry numbers of 40, 50, 60 days, there's just a lot of cost and issues, and delays and frustration in those 40 or 50 or 60 days. So we really take out a lot of the friction is probably the easiest way to look at it. So when you have 8,000 people in one building rowing in the same direction, you're going to get down that river a lot faster, than a lot of other people. So that's just the majority of our focus that we have. And, the saving the consumers money, a couple other things like products like Exact Rate, where, instead of doing a 7 and a quarter, 6.999, or 7.121, like being able to, utilize these different technologies and product buy downs, like buy down rates. So you can, just having consumers use and have the ability to, evaluate all these different products is just huge, and it can be very effective for them.
When you talk about bringing those brokers in every week, are those people who are new to the broker space, or are those just your current customers who come in on a regular basis for different, more advanced training?
Yeah, all the above. So we have, new LO training where a lot of our brokers will say, hey, I want to grow my business. I want to hire a couple loan officers, but I don't have the time to train them and develop them and have them get acclimated to mortgage. So what they do is they'll send them here. And we'll help train them, we'll help develop them. So when they go back to their office, they have a much better understanding of all the different things. Plus, we have a tremendous amount of products online through our academy, hundreds of videos on how to calculate income, just as an example, and many other things that we can help create much more value for our brokers. But that's just one example. And obviously, we have much more, hey, brokers have been around for many years, and hey, how do I enhance my craft? How do I get better at, establishing, meetings with my real estate agents? How do I get better at networking? How do I get better at whatever it may be? We have so many different options and courses that our people can train them in. So it's been obviously very, very effective.
When they come in this year versus other years, what do you feel like the difference is? What do they need this year that is different maybe than the past several years?
So it's interesting. So one of the key things that we do too is we have an advisory council. We have a processor advisory council. We have a loan officer advisory council. We have a broker advisory. So we have all these councils that we meet with, and it's a group of, let's say 10 to 20 people or so, which are made up of, new broker shops, experienced broker shops, and we get their feedback on like, hey, they're the feet in the street. Again, the scale of they're in every community across the country. So when we launch a product, or we're thinking about a product, or we're thinking about a technology, the scale and the distribution channel that we have is massive. So we want to make sure we get all the feedback from our clients who are involved with all of these things to make sure that when we do something, we're doing it in the right fashion and the right way. So these advisory councils are very important to us and how we think about things. But right now, like it's a lot about, hey, how do I deal with higher interest rates? How do I really help get meetings with real estate agents to help promote zero down, help them understand that there are different products out there and buy down products and exact rate products. It's really just helping them help navigate, the higher rate environments. But also what we're really starting to push is, if rates move down 50 basis points, or 100 basis points, we'll double our business. So it's making sure that they're starting to get in the gym and work out a little bit on, hey, what does it mean to do a refi again? Because sometimes people forget how to do a refi because they've been focusing on purchase. So we're really stepping up training as it relates to refis and making sure that they're making, staying in touch with their previous borrowers so they can take advantage of the opportunity when it comes.
That's huge because we know that this market's going to turn.
Mm-hmm.
I know the MBA is, saying, I think 6.5 by the end of the year. Our lead analyst, Logan Motoshami, can see a pathway even a little bit lower than that, depending on, there's a lot of variables there, obviously, but no matter what happens, it's like, this is a volatile market as far as the mortgage rates, as far as a lot of, home prices, things like that. So, getting ready for whatever's coming next is really key if you're gonna thrive and not just survive.
Yeah, I mean, I would say, Sarah, strategically, that's probably the number one thing that I think separates us from everybody else right now is we don't know when that's going to happen. To your point, it could be 6 months, it could be 2 months, it could be tomorrow. I mean, that's the bottom line. And what we've been doing at UWM is since the first of the year, we've hired well over 2,000 people, at the company. So the way that we think about it is we don't know what's going to happen, but it's going to happen. So we have been, hiring, training, developing, really stepping on the pedal with technology and AI initiatives and everything that we're doing because we are going to be the most prepared lender in the country when the rates do drop. And other people will be scrambling. So when we can close a loan in 14 or 15 days, if rates drop 100 basis points, guess what? They're still going to close in 14 or 15 days, maybe even faster. So, our competitors and a lot of companies, they've been reducing. They're going to really struggle when the rates do drop because they're not going to be able to execute on the business that comes in, and we will be able to. So the way that we look at it is we are strategically, we're the most prepared lender in the country to deal with it. And if it happens tomorrow, great. If it happens in 2 months, that's fine. If it happens in 6 months, it just gives us more time to prepare. So we're going to be fine either way.
One of the weird things about this market, or at least the way that it's acting, is normally when you have higher mortgage rates, then, your home prices come down. And of course, I mean, that's happened in some areas of the country, but generally speaking, all we're seeing is like their growth rate is slowing down, not necessarily the prices are dropping. Prices are definitely not dropping the way a lot of people thought they would, given where mortgage rates are, right? It's just a really unique cycle with a lot of different variables.
Right.
But so how is UWM adapting its strategies to address especially the rising cost of home prices right now?
Yeah, look, I think we're going to do great in all cycles, and I think that's a consistent message that we have. Is obviously when rates drop and there's a refi environment that we've been in, and we consistently, again, mortgage market goes up and down, but we're going to do great in a refi, and we're going to do great in a purchase. And I think this environment that we're in, obviously, you mentioned home prices. I think the number just came out, it was like 6.3% across the board, which is the highest it's been in a very long time, if not always, ever. It's a huge number. But the reality is that gives more people opportunity for cash out refis. It gives them more opportunity to do a HELOC. So I think the ability to adjust, just like anything, like you have to adjust. If rates are a little bit higher, right? How do you help consumers operate in a higher rate environment, whether it's a zero down product to help them get into a home, or if it's a HELOC or a cash out to take advantage of the equity that they have in their house? These are the things that we're doing across the board. And if rates drop and they want to, reduce their rate and get into a lower rated loan, that's fine. We can help with that too. So I think consistently across the board, we're just able to operate in all cycles of the business versus just relying on a low rate business model like many others do.
You talked about the market share of brokers and wholesale going up so much. That is a really high number. From your perspective, is that a function of the brokers that you had just doing a lot more volume, or is that seeing a lot more people come into the broker channel?
It's a little bit of both, but I would say we are seeing a lot of brokers leaving retail and joining wholesale because they can see the opportunities, right? If you're a loan officer at a bank or at a retail lender, again, you're only dealing with the products, the lead times that you're dealing with. You're captive to whatever those things are. Where you're an independent, you have many more options. I mean, it's just very simple. Would you rather work at one place where you have one toolbox, or another place where you have 10 different toolboxes to choose from. So from our perspective, it's the best place for a loan officer to be. They continue to see it, and when you're a heavy refi in a heavy refi environment, you don't see a lot of movement because everybody's just kind of refining their servicing portfolio, so people kind of stay put. But you generally see, as rates go up, a lot of people leave, and that's what we've experienced certainly over the past couple of years. And I think it's roughly give or take about 20,000 retail loan officers that have left the retail market and joined the wholesale market. So these are things that we're experiencing all the time, and obviously when they're jumping over to wholesale, they can see that the UWM platform is an excellent platform, and usually the platform of choice and the partner of choice for them.
When you look at this current environment, there's a lot going on, right? We've talked about some of the things. I think that we're in a better spot. I think generally when you go, the zeitgeist or the vibe, if you want to say that, of the market is much better in 2024 than 2023, but still pretty tough for most people. What gives you hope, or what are you optimistic about when you look at this market and where UWM is?
Yeah, I think most people say like, hey, we've gotten through the worst of the worst times, but you never know. Like, you just don't know what's going to happen tomorrow. But we generally feel very like the worst is past us, and we're starting to see much a better picture moving forward across the board for the industry. Again, we'll continue to do well regardless of the cycle. But we're very optimistic about the back half of 24. But to be honest with you, Sarah, like, we already know we've won in 24. Like, we're already moving on to 25 and 26. That's just how we think about things. Like, we're always investing and thinking about the future. So we've already done great in 24. We know we're going to do great in 24, and it's about 25 and 26, and really preparing, because the separation between UWM and our competitors is already pretty big. But over the next 6 to 12 months, we expect that to increase significantly. So we're just really doubling down on all the investments in tech and everything that we do for the future.
Alex, thank you so much for being on. Great to talk to you.
Great to talk to you too, Sarah.